Boom. All right, y'all. What is up? Kimberly Janelle. I'm super excited to be here with y'all tonight. Because I am about to share some stuff I think is going to change things for you and change the way that you see taxes, hopefully forever. But I'm glad to be in my zone of genius. Like, this is my jam. Teaching and explaining hard, scary concepts when it comes to taxes. That is my jam. And so I'm excited to be back in this space. So, uh, Kimberly Janelle, founder of the Intent to Profit strategy, which I'll get into that a little more towards the end, tax strategist. But before we dive in real quick, I want to know how many of you have ever felt like or feel like you pay way too much in taxes as a business owner? Just drop a dollar sign. I think you got the little emojis that you could drop in the chat. Drop something in the chat for me and say, yeah, that's me. If you feel like you've paid too much, way too much. Yes, 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 yes. Way too much. I hope to make this the absolute last time that you pay more than what you should in taxes. I love it. Come on here. I love it. What I hope you see is that you are not alone. Okay? 93% of business owners, entrepreneurs, overpay the IRS every single year, but not because they want to, but it's because nobody ever taught them the rules of the game. But I'm going to do that for you tonight. We're going to fix that tonight. But first, let me take you back to where this all started, okay? Because if you feeling confused or frustrated or even embarrassed about not knowing how to handle taxes, I've been there. I haven't always been the person that knew how this whole tax thing went. I didn't know the tax game like this. 2007 is when my journey started in H&R Block at H&R Block. And I jumped into taxes because I was taking the buyout at General Motors, and they said, well, they actually said you could transfer to another plant or you can find something else to do. And so I decided to find something else to do. And around that same time, there was a sign in the yard of the H&R Block that was in my city that said they were teaching this tax class. And I was like, well, I'm pretty good with numbers, and maybe this is something that I can do. So I jump into this class and I'm learning about taxes, and I wasn't super excited about taxes initially until I learned about this loophole. I learned about this legal loophole that people who had a business could write stuff off, like they didn't have to pay as much in tax. And I fell in love with that part of tax. But I'm gonna tell you when things really shifted for me. And that was when I seen people who were in business and they were making money, but they always end up on money at the end of the year. They didn't really know how much they were keeping. They didn't feel like they were getting ahead. And there was one lady who came in and she said, I got a letter from the IRS and I don't really know what to do about it. And so as I started digging through her return, and I did not do the return. Let me just say that. By this time, I wasn't at H&R Block. I actually was at a franchise tax business. One of my cousins, his best friend, had a tax business, and he had asked me if I would come and work with him a little bit. And so the lady brought her tax return in and said that she got a letter. She didn't really know what she was supposed to do or what she did or any of those things. And that's when I realized that there were so many things that were missing on her tax return, um, which was the reason why she got the letter. It was the reason why she owed a whole lot of money. And my research brought me to this one thing. And that one thing is that it all boils down to this code in the IRS tax law. Now, I'm gonna let a little bit of my nerdy come out, but that's just so I can show y'all this ain't just some stuff that I Googled. This ain't um some sound bite that I got that I'm trying to regurgitate to you. Like, this is how much I love this stuff, okay? What I discovered, and I was drinking the Kool-Aid for a little while too, until I started to fall in love with tax law. And this is when I discovered this one thing. IRS Code Section 183. It's called the intent to profit law. Hence the name of my group, right? Okay. And it basically says, I'm gonna read it because I don't want to quote it. I want to read it. It says activities not engaged for profit. This is the code that is connected to activities that are not engaged in profit. So I'm like, well, what does that mean? Well, activities not engaged for profit, that means that you're just doing it just because, right? So I'm like, oh, this is the determining factor. This is what the IRS uses to determine if I'm trying to run a business or if this is a hobby. It's not about having 3 years of profit or not being able to show a loss. 3 out of 5 years, you got to show a loss. That's not what it's about. What it's really about is, can you prove your intention to make a profit? That's it. And once I realized this, most entrepreneurs don't lose money because they're bad at business. They lose money because they never learn how to show that they're serious. I've said this before. You ever been around somebody and you know they lying, but they done thought so much about that lie. They know what the lie is, and then they think about, okay, well, if she asked me this, then I'm gonna say that. They thought about a lie to cover up the lie. And then if I gotta have an alibi, then they went ahead and talked to the friend and told the friend what they was gonna say. And if they ask you, then this is what you need to say. Like, they have thought deep and hard and long about how to make sure that their lie sounds like the truth. Well, when you put that into business, we have entrepreneurs who work so hard in their business, but they don't work as hard to keep the proof that they are actually trying to run as a business. That's where they get mixed up. And so I realized then that I did not want to be just a tax preparer. And I've been stuck in this loop for a while, right? I started doing taxes in 2007. I've always been the tax girl. I've been the family tax girl. I've been the church tax girl. I've been the tax girl in the community, in the creative world, in this world, in that world. And it took me a minute to let go of being a tax preparer. But I knew that my gift was being a tax strategist. And that was helping people to figure out exactly what they need to do so that this IRS section or code section 183 is not an issue for them. That they easily can prove their intention to make a profit. Is this making sense for you guys? Type aha in the chat if you following me, because that's the shift. Okay? The shift is not how many years you carry a loss. The shift literally is, can I prove that my intention is to make a profit? Now, once I understood that, then I knew how to solve that problem for my clients. When people are like, yeah, I just need to kind of gather some stuff. I ain't gonna worry about this because I don't know where this is, and it's gonna take me too long. No, I started creating checklists and worksheets and different things that people can use throughout the year, things that people can use at tax time to gather all of this information so that when they documented those numbers on their return, they didn't have to worry about, well, I had one lady tell me, she said, I don't want to, I know I could probably claim this, but I don't want to claim it because if the IRS asks me some questions, I'm just going to, I just kind of want to slide under the radar. Do you understand that the IRS does not give you brownie points for letting them keep your money? Let me say it slow. You don't get a badge in heaven. You don't get a t-shirt. They won't even know your name because you let them keep money that you rightfully should be pocketing. There's no reward for that. Okay. And so it's in your best interest to only pay what you owe. And that money that you have been giving to them, this is your opportunity to create legacy. People say it all the time, like you can create legacy, and taxes, you can use taxes and insurance to create legacy, but nobody ever teaches you how. And I'm going to do that for you tonight. And so learning that is why I realized that I needed to create a safe space. I needed to create the space for entrepreneurs to come and learn exactly what they need to know, so that the myths that's floating around in cyberspace, we can break those, and you can operate your business knowing what you need to know. Okay, so I'm going to teach everybody, as many people as I possibly can, how to think like the IRS, so then you'll never have to be worried about an audit, ever. If you know how they think, if you know what they're looking for, if you know what their motive is, then you can be prepared for that. So when they do come knocking, because they will, the IRS is chasing their bag like everybody else, you will already know what to do. Okay? So I know some of you are probably thinking, oh, let me move my slides a little bit. Yes, I should move my slides. Move my slides. Okay. So I know you probably are thinking, you know, that's great, but I'm not a numbers person. You might be thinking, well, I tried to stay organized before, but like life be lifing, right? Life happens. And I get it. I'm the tax girl, and if you look at my purse right now, I have a handful of receipts. The tax girl got receipts in my purse as we speak. So I understand that life happens. I understand that you get frustrated and overwhelmed, that life gets crazy, right? And that's okay. But the gift is that you have a system that you can easily plug back into, that can help you to stay organized, that can help you get caught up, right? So the tax time does not feel frustrating. All right. So I want you to close your eyes for a minute. Tracy, don't you close your eyes, because I think you're driving. Don't do that. Okay. But I want you just to imagine in your mind what it will finally feel like, what it will feel like for you to finally know that you're doing it right. That you got a sense of relief and this lightness. Kelly came on and was talking about being stressed and feeling that heaviness. That's the confidence I want to give you. That this ain't going to solve everything, but this is definitely going to be the first step to you being able to feel like, okay, I can do this, because you absolutely can. Okay? All right. So let's get started. Y'all, I was so nervous. I made me some notes so that I don't get off track. So if you hear my papers, that's what it is. All right. So that's how I got here, from tax preparer to tax strategist to teacher. I had somebody tell me once before, like, man, you make this tax stuff sound so easy. And it's not. It's law, right? It's complicated. It's nuanced. It's all those things. But because I love it that much, I can't deny that I do have the gift of being able to explain it in a way that you understand it, in bite-sized pieces, that you can grab it and feel like you can take control of that part of your business. And so for 17 years, I've been doing this. I didn't know that that's exactly what I was doing when I was doing it. But I just knew that there were things that people didn't know, and I wanted to teach them those things. And so tonight I'm going to share with you the 5 biggest tax mistakes that people make in business that cost them thousands of dollars every single year, and how to fix them immediately. Okay. So if you are ready, I need you to drop ready in the chat. If you are ready for me to get to it, I hope y'all appreciate that I didn't take too much time talking about who I am and all that stuff. But type ready in the chat if you're ready for me to tell you, yes, 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 what these 5 mistakes are, how to fix them, how to stay audit ready. And I am going to give you a special invitation to continue to work with me. So I'm just going to put that out there. And when it's time to do that, if you want to duck off, you absolutely can. But I am going to, it would be selfish of me. I heard this on a podcast this week. He said, it's your God-given obligation to offer assistance to people in business, especially if God gave you the gift. So you're not operating in business. And I think I posted this on my social media. You're not operating in business. Kimberly not operating in business when I have the solution to many people's problem. But I'm more concerned about what I'm going to look like for helping you. I'm more concerned about what somebody's going to think to offer my assistance. Is like knowing that I could save your life, but I'm worried about getting wet. I'm worried about getting dirty. I'm worried about sweating, but I know I could save your life. Now that might be kind of drastic, but that's what it felt like to me when I heard this. And so it would be selfish of me. It would be disobedient of me not to offer you the opportunity to glean from the wisdom that I've gained over these 17 years. And so, yes, there will be an invitation to continue to work with me. Please know that for the month of November, I'm going to be teaching a whole lot of stuff. So there will be other opportunities to join into masterclasses. But that offer is going to be there. Okay. All right. So you said you ready. Let's get to it. I'm going to try and quit activating that menu down here. All right. Screenshot this. Take a screenshot. These are the top 5. Now, I'm not saying that there's not more. I'm not saying that there's not a whole lot more mistakes that people make in regards to taxes as an entrepreneur, but these are the top 5. And I'm going to break down all 5 of them. And I'm going to tell you how to fix it. All right. Let's get to mistake number 1. Mistake number 1. So the belief is taxes only happen once a year. Okay. Every April, yes, people run around like me with these receipts in your purse. Look, y'all. Look at these receipts. Receipts in your purse. And you reaching out to your tax person, you're like, yeah, I need to get my stuff together. I'm coming, right? And some of y'all are so good that you already know I'm not gonna be ready by April. Let me just go on and file my extension. Okay. You think that tax time starts in April, but the truth is that's when it ends. See, we call tax time that time when everybody's getting their W-2 and they're filing their return to find out how much they get back or how much they owe. That is not tax season. Tax season happens from January to December. I want you to think about this. You got a 9 to 5. You work 80 hours, get paid every 2 weeks. The first thing that's taken out of your paycheck is your taxes. Now, your employer is going to do that every 2 weeks, every month, every week, however often you get paid. And they just collecting that tax that they pull out of your paycheck. But every quarter, they have to submit those taxes to the IRS because the IRS is a pay-as-you-go system, meaning that as you make money, they want their money. They'll wait until the quarter is over. But they don't want to wait all year to see how much money you've made to get their money. Every quarter, they want you to tally up, okay? What average people consider tax season, that's actually tax reconciliation time. That's when you sit down at the table. It's like if Miss Tracy owed me some money, but I gave her some money, but then she let me borrow some money, and then we done went back and forth all year long. At tax reconciliation time, we're going to sit at the table, and I'm going to say, okay, Tracy, I gave you $900, but you let me borrow $1,000. She like, yeah, but remember you gave me that $200, and then I took back $150. And I'm like, okay, yeah, I do remember that, but then I think I gave you another $500, but you gave me $300 back. And then we're going to get to the bottom line. So do I owe you, or do you owe me, or are we even? Okay? Tax reconciliation time happens when you sit down at the tax desk and you give them the W-2s, you give them your 1099s, you give them your profit and loss, you give them all of your expenses, all of the stuff that you have tracked, and they put it into the system, and based on the formulas that are already pre-calculated, that's when they tell you that you either owe the IRS or the IRS owes you. We're getting ready to reconcile. That's what happens. Tax season happens all year. Okay? So let me tell you about, one of my clients who has a baking business. She struggles because she buys all of her stuff for baking. She buys it with all of her household stuff, which could be easy to do, right? If you're baking cakes and cookies and cake pops and all this stuff, you need flour and sugar and vanilla flavoring, all of these normal things that could be average personal expenses. Well, when you get to track the expenses or at the end of the year, and I want to know how much money did you spend on these cakes and cupcakes and cookies and cake pops that you made, she has no idea because she hasn't been keeping track of the expenses directly related to her business. Are you tracking with me? So I taught her how to use a system. You can download it onto your phone. I am not shy in saying that I always push my people to QuickBooks. I always push my people to QuickBooks. But there are some people who are not ready for an automated system, and that's perfectly fine. I help you with another system. But I created a habit for her, helped her to create a habit that she takes 15 minutes, 20 minutes. And I don't care when it is. It could be on Sunday nights when she's sitting while her husband's watching football and she can sit. She ain't watching football, but she's doing her tracking, right? It could be on Thursday night if that's the night that your shows come on and you know you're going to sit for 2 hours. It used to be Scandal and all those shows on Thursday night, right? If you know from 8 o'clock to 10 o'clock, you're going to be sitting watching these shows. And you ain't going to be really watching them, right? Because we watch TV, but we scrolling on our phone at the same time. We ain't all the way invested. But it's so much easier if you take 15 minutes once a week to track versus getting to January. You know those W-2s are coming. You know the 1099s are coming. You know that tax reconciliation season is coming. And you scrambling. I can't tell you how many people sit at my desk, hypothetically, virtually, right? And they say, I'm not gonna worry about that because it's gonna take me too long to figure out where that is. Or I don't even know if I didn't know that I could claim that. Okay, I don't even know the first way. I don't know the first way to figure that out. So I want you to commit to creating, and I'll call it Fix It Friday. It don't have to be Friday. It could be Sunday. It could be Thursday. But I want you to put in the chat, Fix It Friday, or whatever day that you're going to choose, okay? You got to start tracking weekly. You got to start tracking weekly. And for all of you that are on here, I have a worksheet that I'm going to send to you after this is over that gives you the categories of expenses that you need to be tracking. And these categories, it doesn't matter what type of business you're in. The categories are the same. Now, what those expenses look like are different based on the type of business you have, right? If I'm a baker, then my expenses are going to look a little different than Miss Kelly's expenses, who runs an insurance agency. She ain't going to have the same type of expenses that I have. But we both can spend money in advertising. We both can have supplies. We both can have professional development. But what that looks like depends on the industry. Does that make sense? Let me know it's making sense. Let me know it's making sense. Yes, 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 yes. Thank you for talking back to me. Thank you for talking back to me. Now I want you to imagine how different tax time would be if you started now People aren't thinking about it now. People thinking about Thanksgiving, they thinking about Christmas, they thinking about, people are not thinking about it now, but this is the prime time for you to be thinking about, what do I need to go back to January and find? What do I need to go back to the summertime and find? This is the prime time. So I want you to imagine yourself on whatever day you say. If it's Fix It Friday, then bet. If it's CEO Sunday, bet. If it's Thirsty Thursday with a glass of wine while you do your tracking, bet. But I want you to imagine doing your weekly tracking and everything is handled, how calm next April will be. Taxes are not just once a year. If I'm honest, it's something daily. It's daily proof if you're serious. What about gas, lunch, travel records? Absolutely. All of those can be an expense depending on what your business looks like. Okay? All right. Let's talk about mistake number 2. This is my favorite one. Missing key deductions. Okay, so here's the belief. And I said it on the first one, I'm not a numbers person, right? People lose thousands of dollars not because they don't make the money, but they lose money because they don't claim what they've already spent. Now, you see these pictures here on the screen, and I did that intentionally. We already spend money doing things, but we don't keep track of the things that we do. Most of the time it's because you don't understand how it connects to your business, but sometimes you do. I had one girl tell me, and this was a couple years ago, because it used to be that you could write off 100% of your business meals. And I had a girl tell me, she's like, yeah, I'm just going to go have a business meal with a whole bunch of people every weekend. And then I can just go, I could write that off. Okay. Okay. So you know about business meals, right? But do you know the requirements of a business meal in order for you to actually be able to write it off? Do you have the wherewithal or the understanding that just because I can write off 100% of my business meals, is it wise for me to do so? Because although I can write off 100%, if I got $25,000 in business meals and my business made $9,000, I got some questions that I need to answer, right? So, do you need to talk about your business? You absolutely do. You need to talk about business. Okay? That's one of the requirements. Now there's no time limit. There's no time limit. There's nothing in section code or code section 183 that says you have to speak business for 10 minutes or more in order for it to be a business meal. But you absolutely do have to speak about business. Okay? And you also have to have a receipt. I get so tired of people saying, I ain't gotta have no, you could just claim it. I'm gonna pick on my husband. When I first met my husband, now if you don't know, my husband is a comedian. He's been a comedian for a couple decades. And when I first met my husband, he said, yeah, I might have to get with you because taxes and stuff like that. And he's like, I got a lot of write-offs and stuff. So I'm like, oh, okay. Well, you still got your receipt for your stuff? And he just kind of looked at me. Because see, the IRS, if you don't document it, it didn't happen. That's right. If it's not documented, it didn't happen. So we talking about home office, vehicle mileage, marketing, meals, education. We talking about moments where you can pay your kids to do stuff in your business. Those are key deductions that help you to avoid paying more in tax than what you should. You don't need to love math. You just need to love your money. You need to love what you want to do with your money enough that you track it. Okay. I want you to think about, I want you to think of deductions as a reward because it really is. Y'all listen. Do you remember in the pandemic? And maybe I pay attention to this because I'm a tax nerd and I love this stuff, right? If you remember in the pandemic, there were school teachers who still had to get on Zoom and teach their classroom as if they were at school. And I remember so many of them being upset because they were like, oh, well, since I'm working from home, then I can write this off on my taxes. And unfortunately, because they were employees, because they were W-2 employees getting paid and taxes coming out of their paycheck, they could not claim a home office. But you, ma'am, you, sir, who indeed has a business, who indeed is working to make money, you can write off a portion of every bill that you pay for your house, called home office deduction. That's law. You can do that. No, I don't. I'm okay. I don't want to do that because I don't want to get in no trouble. Ma'am, do you think I'm gonna jeopardize my livelihood by telling you that you could do something that's illegal? I wish I had the picture back here. I got a whole big old family. I got like 6 kids and 5 grandkids and like 3 on the way. I'm not getting ready to go. I'm not. Mm-mm. It's a reward. Deductions are rewards for people who are brave enough to create something new in the economy that could potentially employ more people. It puts more tax into the system. Um, it stimulates the economy, so you get rewarded. That's what a deduction is. But if you don't document it, it didn't happen. Okay? So it means that you got to think like a CEO. Now, I know some of us that I meet people all the time who are in business and they did not start the business initially to be in business. Some people are making money doing things because they needed to make money. We seen that in the pandemic too. People was making plates, cooking food. The next thing you know, you got people asking you on every weekend to cook. And then the next thing you know is 4 or 5 days a week. People asking, what you cooking? Right? And then before you know it, it's like, I kind of got something here. So sometimes it is an adjustment to shift your mindset from side hustle culture to CEO. But I need you to commit, even if it's just once a week. I need you to get in the CEO mode and think about the rewards that you are owed for this week. Does it make sense what I'm saying? Drop CEO in the chat if you're going to start thinking like a CEO. And I'm telling you, all it takes, in the same way that let me think of any other discipline. People who go work out, and I used to. I'm going to get back to it. Don't judge me. I used to. Okay? People who go and work out. They didn't go work out all the time because they love working out, right? They kept their mind focused on the end goal, and then after a while it just became habit. After a while they got up naturally at 6 o'clock to go to the gym, even if they didn't feel like it. It became discipline. They were disciplined, and that's just what they do, right? I promise you that if you start purposefully with 15 minutes once a week, then after a while it will just become natural to you that you won't even have to plan the 15 minutes every day. You'll be sitting down doing some things to help you with this part of your business. Does that make sense? I hope you can you tell me, would you be okay if you started keeping more of your money on purpose instead of by accident? Would you be okay with that? Would that work for you? Definitely, definitely. I love that. I love that. Yes. Facts. Amen. All right. The intent to profit system teaches you that. Okay, let's keep going. Mistake number 3. Y'all feel good so far? We good? Y'all tracking with me? Yeah. All right. Mistake number 3. Now, here's the false belief. Okay? I don't have time or money to fix this. And I'm here to tell you the truth is you can't afford to not fix this if this is your problem. Okay? The business structure decides how you're taxed and how much you keep. Okay? Sole proprietors, a sole proprietor, I could wake up one day and say, you know what? I'm pretty dope with this camera. So I think what I'm gonna do is start taking pictures of people. I think I want to start a business. I think I just kind of want to start taking pictures of people and see if they'll pay me for them. I am officially in business. The IRS says that the moment now, let me put a caveat right here. Whenever I quote the IRS, it is not the law itself, okay? I'm giving you the Kimberly Janelle version of what the IRS code section says, all right? The IRS says the moment that you think about being in business, you are a business. All you have to do is declare yourself in business, and you're in business as a sole proprietor. That's it. I'm gonna start a business. The IRS says, all right, clock is on. Okay? It's simple to start, but it's expensive. And it's expensive by way of self-employment tax. Okay? The LLC is just a step up from sole proprietorship. It's simple and it gives you a little bit of protection, which is why everybody runs to the LLC. Well, I'm protected LLC. Well, if you don't know how to keep, if you do not know how to not break the veil, then the protection does you no good. Because if you are commingling your funds, if your business money and your personal money is playing together, if you paying your house bills out your business bank account, if you paying your personal expenses out your business bank account, then there's a term that they call that is commingling of funds, and that breaks the veil of the LLC, and you're no longer protected. So while people run to the LLC because it is easy, you go to the Secretary of State, you look for the name. If the name is available, you type in your information. $97 in Indiana anyway, and it's yours. Okay. But it is expensive because you are taxed with the self-employment tax, 15.3% in self-employment tax. Okay. If you are an LLC and you have reached a certain income level, it is absolutely more beneficial to you to be an S corp. Okay? An S corp requires you to make a certain amount of money so that you can put yourself on payroll as an employee of the S corp, but you are not an employee of an LLC. You cannot run payroll for yourself on an LLC. Yeah. But people stay in the structure that they're in because they think that changing is hard or it costs a lot of money, and it's not. It actually costs you more money to stay in the wrong structure than it does for you to stay in the wrong structure and pay more in tax. Jennifer asked, so should you have a separate banking account? Absolutely. I don't care what structure you choose. You need to have a separate bank account. Let me go back and clear this up. If you are an LLC or an S corp, you are required legally, you are required to have a bank account in the name of the LLC or the S corp. Okay? We're not even going to talk C corp because anybody that's on this call should not be thinking about C corp. C corp corporation, that's Walmart, Target, that's big boy, that's talking about stock and ownership, and none of us are ready for that. It is such a beast. If you are not making $500,000, $1 million, and even then I still would shy you away from a C corp and push you to an S corp. So we are not talking about C Corp at all. So if you have an LLC or you are an LLC that's taxed as an S Corp, you legally have to have a bank account in the name of the business. Now, sole proprietor. Remember, let's go back to my story. I'm cold with the camera. I think I want to start taking some pictures and seeing how I do. You know, maybe I'm just testing it out. I don't want to really get too deep in it because I just kind of want to see how I do. I still advise people to get a separate bank account, and any money that's made taking the photos, whatever your business is, it goes into that account. Because remember what mistake number 2 was? We don't track. Let me go back. 1, we don't track. So how can you track what you paid, track what you made, if everything plays in the same bank account? You can't track it. Okay? I learned to have 4 different business bank accounts: income, expense, payroll, savings. Is this good advice? Miss Yolanda, that advice is only as good as your tracking. Sometimes having too many things causes us to end up like this. I mean, you got all the accounts and you keeping the stuff, but it's so much going on that you don't even end up really doing it anyway. So what's better is to have, and I'm gonna tell you what I do. When me and my husband got married and we created our partnership. Now, I have an LLC. I also have a partnership with my husband, okay? I moved my LLC bank account over to the bank where we created our personal account, okay? So we have a joint personal account. We got an account for our partnership, our comedy company, and I got my LLC bank account. Why? Because it's so much easier that when people pay Kimberly Janelle Enterprises, it hits my LLC bank account and I transfer whatever we need into our joint account, and I spend whatever we gonna spend in our joint account. I don't have to track what's in my joint account outside of telling my husband, right? But it's the same as when your 9-to-5 gives you a check. They don't care what you do with the check once you cash it. That's your business. It's the same way if somebody pays me in my business, in my LLC, once it hits my LLC bank account, then it counts as income for my business. And then however much I transfer to my personal account to pay myself is my business. And what I do with that money is my business. Does that make sense? And so if you're somebody that's really good with, you get $5,000, you're going to put 10% of it away for savings, 10% of it away in this account for taxes, 15% in this account. If you really good at that, then go for it. The only thing that I will tell you is what is not true about taxes. I hear people saying this all the time. Well, you can just create a bank account for your taxes and you can just save your taxes over there all year and then pay them at the end of the year. Absolutely not. Absolutely not. I said to you before, the IRS tax system is a pay-as-you-go system. Do you know that even if you are owed a refund, you can still be fined for not paying throughout the year? That is a fact, okay? So don't let nobody tell you that you can just save money in a tax account all year and then just wait to the end of the year and send it. They'll take your payment. They'll also add on a fine for not sending me my money earlier. Okay? Hope that answers your question. Okay. So let me tell you about a client that I had. She owned a salon, and she was an LLC and thought that it was just going to be too much for her to switch over to an S corp. Now, I want you to think, Miss Yolanda, if you get a tax bill every year of $15,000 to $18,000, this is how much you owe at the end of the year. And if I tell you that by just switching structures saves you $9,500, She was like, yeah, sign me up. Okay, sign me up. Because the tax structure changes when the structure of the business changes. Okay? So if that made sense, yeah. If that made sense, I want you to drop in the chat. Structure me, baby. Structure me. Structure me. Yes. Structure me. She says, structure me, please. Yes. You open up your mind to these small changes, it could create such big freedom. All right, is this good? Y'all feeling good? Doing all right? All right. Mistake number 4. Not audit proofing. Now let's talk about the false belief. I'm not organized enough. I'm bad with paperwork. Blah, blah, blah. Okay. I understand this gives people nightmares, and it doesn't have to, but this is what I mean when I say audit proofing. It just means that you are able to prove what you already know is true. Well, how do I do that, Kim? Mileage logs, digital receipts, notes about what you spend. Yeah, think of it like a seatbelt. We put our seatbelts on in the car. We hope we never use them, but if you've ever got into an accident and you had your seatbelt on, I bet you was glad you had it on, right? So it's a matter of having the proof, hoping that you don't need it, but if you do need it, you're glad that you have it. Okay? One of my clients, uh I've been saying it for years, and I really got this from the pandemic. Do y'all remember during the pandemic when we got those stimulus checks? And if you was on the internet at all, you heard people say, what you need to do is take that $600. You need to open you up an LLC. You need to go take your LLC EIN number, go down to the bank, get you a G-Wagon in your business name. Then you need to flip that. And then all these crazy ideas, right? And they was getting the PPP loans. Now listen, I'm not going to knock the PPP loans because Kimberly Janelle Enterprises got her a PPP loan, okay? But I used my accurate information. Again, the PPP loan, like I talked about those deductions, a deduction is like a reward. That PPP loan was like a reward for people who had tracked their business the way that they were supposed to. If you did that, then you can be rewarded with this money into your business because you tracked. And so since I tracked, I got me one of them PPPs, Miss Yolanda. Now you're not gonna see my name in no headlines nowhere for embezzlement or getting millions of dollars that I wasn't owed because I did not falsify the documents that they asked for. Okay. But the benefit to the PPP as a business owner, it was helping to um, it was helping to replace income that I was not able to get because the world was shut down. Okay. So I had a client, and I've been saying it for years. Let me get back to the pandemic. So since the pandemic, there was a record number of businesses that were created that year. And I don't remember the exact number. I used to have it right at the top of my head. But in that year, there was a record-breaking number of LLCs that were formed and created because of the stimulus. Okay? And so because of that, the IRS was like, yeah, I don't think all of y'all is really operating a business. I think some of y'all is starting a business and operating. Come on here. She said people got lawn businesses and don't even got a lawnmower. That's what I'm saying. Okay. So I stayed very connected to the IRS and what they were saying around this same time. And it is absolutely true. The IRS will be combing through every LLC that exists. It may take them 10 years to do it. It may take them 10 years to do it. But they are going to comb through every LLC that exists. Because what also happened, now do y'all remember there was a big deal about the BOI report, benefit owner information, where you had to fill out this information and say who was the owner of the business and all this stuff. And it was this big controversy. Okay, I ain't fill one out, Miss Yolanda, because they've been going back and forth. You got to fill it out. No, you don't. Oh, you better fill it out by tomorrow. Okay, no, you don't. Okay, yes, you got to fill it out. No, you don't, because it's against the Constitution and it invades my privacy. Well, yes, you do. Well, the reason why that was a big deal was because people were hiding money laundering businesses and sex trafficking businesses under the name of an LLC. Okay? So the BOI was an attempt for them to find out which of these businesses are legit. What kind of activity are you saying that you're running in this business, right? And then the next step of that, and it's not related, but it's part of it. Hey, Miss Yolanda, I heard you got Duckworth LLC over there. Send me proof of your 3 largest expenses. That's what an audit looks like, y'all. An audit is not them coming to your business or your house with a briefcase and a suit on, knocking on the door and saying, I need to look at your books. That's not how they do that. They don't do that anymore. What they do is they send a letter. And because it says IRS on the outside of the envelope, most times we don't even open the envelope. Okay? But in the envelope, it says, hey, our numbers don't match yours that you turned in on your return. Can you please provide us with proof of your 3 largest expenses? They don't even tell you what they are. They tell you, you go look at your return and the 3 largest expenses that you claimed, can you provide us with copies of proof? Don't send us the originals. Send us copies of your proof for those expenses. What this means is the burden of proof now is on Kimberly to prove that I actually did spend what I said in these 3 categories. Now, what happens, come on, Miss Tracy, and the state is even worse, okay? The federal is a little more lenient. The state is buttholes. The state of Indiana is a butthole. That's the nicest way I can say it. They're buttholes. The state of Indiana will give you 10 days. They might give you 72 hours. And it took 96 hours for the letter to get to you. So by the time you get the letter, your time done expired. Or by the time you get the letter, you got 2 days. Okay? IRS is a little more lenient. They give you 30 days. Send me proof of the top 3 expenses. So when I come back with my copies of all my receipts, of my invoices, of my mileage log, and I put them in an envelope and I send them back, and the IRS pull them out the envelope and they're like, ooh, all right, well, we can't really say it's a lie because now the burden of proof is on them to prove that this is not true, that it's not accurate, that it's false, that it's fake news, right? Audit-proofing just says that when they come knock on my door by way of a letter and ask for proof of my 3 largest expenses, no matter how long it is, I can access it and I can give them what they want and they will go away. They will go away. Okay? The reason why people get caught up with audits. Come on, Shani. The reason why they get caught up. I'm not going to say caught because we're doing legitimate things. Remember I told you about the liar? The liar works really hard on the lie and the alibi and the people and the lie to cover the lie. We are working really hard in the business, doing the thing, cooking the food, writing the books, sending the letters, whatever it is that we do. But we don't do as good of a job keeping track of the proof of what we're doing. Okay? So I want you to imagine how it would feel if you know how to prove every single deduction that you claim every single year, how much more confident you can show up in business knowing what you need to keep track of and how to keep track of it. Do y'all know that me and my husband, now we only been married a little over a year, but this has been my practice even before I got married. I don't take vacation. I always take a business trip. Every trip is a business trip. Why? How can you do that, Kim? Because I know what section code 183 says. I know what it says. I know how much time they already allot for business trips. I know how many of the days have to be filled with business activity. And I know what business activity looks like in my business. Right? I wanted to take my kids to Myrtle Beach one year. And I said, dang, well, I would really love for us to do that. Now, I should have went to the West Coast because it was during spring break and it was still kind of cold, but we didn't care. We just wanted to go on a road trip and get out of here. So my thought was, well, who do I know in South Carolina? Who do I know on that side of the world that gives me a reason to go over there? So I put it on my social media. Hey, I'm gonna be in the South Carolina area. Who do I know that lives in Virginia, South Carolina, Myrtle Beach area? Now, this is ironic, okay? A girl hit me in the inbox and she said, Miss Kimberly, it's so crazy you posted that. She said, I wanted to work with you this year, but I got so much stuff and I didn't know what to send you. Like, I got all these bank statements and all these receipts and all this stuff. I didn't know what you needed in order to do my taxes. Y'all guess where she lived? Like 15 minutes from Myrtle Beach. Not even lying. I'm not making this up. I'm not making this up. And I said, that's perfect. Don't worry about it. I'll come get it. I'll come get the paperwork. She's like, are you serious? I'm like, yeah, I'll come get it. Because I already knew that going to Myrtle Beach was considered a business day. I knew that coming home from Myrtle Beach was considered a business day. And I knew that more of the days while I was there had to be considered business days than the days that were not business days. So if I was going 5 days, more of the days had to include business activity than the days that do not include business activity. And I already told you that my ride there and my ride back was considered business days. So I had to have 1 day out of 5 that I actually did business stuff for the entire trip to be a business trip. Okay? So me and my kids in the car. What does it mean for it to be a business trip? That means that my mileage, I wrote it off. That means that my gas, I kept my receipts. That means that everything we ate on the way there was a write-off. That means that when I got there and I emailed the client and was like, hey, find us somewhere that we can meet, preferably a restaurant where we can sit down, bring all your documents. I can sort through what I need, take what I need. Email me and let me know where. Meals on me, because that's a write-off. So she sends me a message. She sent me a text message. She said, hey, Miss Kimberly, I'm thinking we can And I just text her back and said, email me. Because it's about what you can prove. Okay? Everything's in email. Everything. Hey, can't wait to meet you. So glad to process these taxes for you. I know you're nervous. I know it's been, but I'm going to come get them. And I'm going to show you a system. And I'm going to leave you with some resources. And then when we get ready, come on, Miss Yolanda, paper trail. Everything is about what you can prove. All right? So I met her at the restaurant. She brought this bag full of stuff. And I said, don't worry about it. We don't have to sort through nothing. Anything that I don't need, I'll mail it back to you. She said, I don't need it, Miss Kimberly. I said, okay. If you don't need it back, then I'll shred it. But I'll upload everything into your virtual mailbox so that I really have no need to send you back the stuff that I used. Everything will be in the cloud. And I'll email you if I have any questions. And I said, go ahead and find you something to eat. We ain't even got to sit down and eat. She had her daughter and her niece. We ain't even got to sit down and get nothing to eat. Go get in line, get what you want for you, your kids, your niece. But hold on one moment. So guess what else I did, y'all? I'm like, scoot up here. Let's take a picture. Click. And guess what I did with it? Posted on social media. Just met my client in South Carolina. So excited to service her. Why? Because it's about, come on, Jennifer, it's about what you can prove. Do y'all know the same way that they have people on these social media platforms combing through, the FBI is combing through looking for people, talent scouts for these colleges, when they thinking about recruiting a young person, they looking at their social media, they judging their character and their habits and all of that. The IRS has people too. So if you saying I'm in business, but they comb through your social media and they don't see no ounce of business type activity nowhere, who you think you fooling? No, ma'am. No, sir. So it's about what you can prove, okay? You already doing the stuff. You're already doing it. You need a system to help you document what you're doing. And I promise you, the system that I came up with, when y'all hear it, y'all gonna be like, really? Like, I didn't know that. I didn't know that. Okay? So, y'all ready to be audit proof? Audit proof, audit proof. Type audit proof if you want that kind of peace in your business so that you know you don't miss nothing else. And you don't have to be stressed out. Around Christmas time, New Year's, I get so many emails and text messages like, Miss Kimberly, I hope I'm gonna try not to make you cuss me out this year. And I don't cuss nobody out, but I know they feel like it stresses me out that they don't have their stuff together in enough time. It don't bother me because it ain't my tax bill. It ain't my it ain't my letter, right? This all goes for a 1099 person. 1099 or a person working for yourself, because I don't get 1099s from anybody. I create invoices and people pay me, right? I used to get 1099s, Jennifer, in the insurance world, insurance, right? They would send you a 1099 at the end of the year. But there are things that I do for people that I create an invoice and they pay that invoice. So there'll never be a 1099 coming from anybody. But it is my moral obligation to report the money that I make from the invoices that I send and the people that pay me, right? But I only have to pay tax on what I'm legally obligated to pay it on after my rewards, after my deductions. Does that make sense to everybody? Okay. Let's get to mistake number 5. Not having a strategy. I hear all the time from people, yeah, I don't have to have no, I don't need to have no tax strategy because I ain't making enough money to have no tax strategy. Well, let me tell you this. If you wait until you're making more money, you'll never have more money. Because when you make more money, if you don't know what you're supposed to be doing, all of it will go to taxes. If you wait until you make more money, you still won't have money because you'll still be paying more than what you're. Yeah, y'all follow? Y'all following me? Tax strategy isn't for rich people. That's how you get rich. Having a strategy is how you get rich. It's not for rich people. When you plan your profit, then you control your cash flow. You control how much money you get to save. You control how stressed out you are. I had one client, and I can see this one client in particular, and I'm talking about I have a range of clients. Okay, I have entrepreneurs who barely make $20,000 because they don't track nothing. How much money did you make this year? Oh, probably round about like I'm like, yeah, you don't even know. Probably round about like you don't know how much money you made. You don't know how much money you made. So I'm talking about entrepreneurs from that end of the spectrum all the way to I have a doctor. This is my 3rd year working with her. I have a doctor. She makes almost $500,000 a year. Okay? And she does some consulting work, which pays her on a 1099. She goes to these couple clinics and she consults. And every year, y'all, her income is about $500,000. On her W-2, they take out $100,000 in taxes. $99,700, $100,000 in taxes. And because she will not listen to me with this strategy, she continues to additionally owe them at tax time $19,000. That you done pay these people $10,000, $12,000 all year, every month. Then you get to the tax table and you still got to write a check. If you wait until you are rich, you will not have money. Let me add the sauce onto that. Let me add the sauce. Y'all can tell I'm getting passionate about this because it irks me so bad. In addition to that, she said to me, she said, I just went through a divorce. And in my divorce, because I made so much more money than him, I lost my retirement. And I can never claim my kids because it's more beneficial tax-wise for him to claim the kids. So she don't have no help tax-wise unless she adopts a strategy. Jennifer says, so should she be paying more taxes each month? Absolutely not. No. The moment that you make $1 outside of W-2 income, it opens up so many benefits. These deductions right here that I'm talking about. She's a consultant for a clinic. She has an office in her house that she sits and goes up. Come on, Shay, document. She got a $2,500 mortgage. Her light bills and gas bills is a couple $100 a month by themselves. She got security. She got a Ring camera. She got all these different things. Jennifer, legally, she can write off 12 to 15% of her house costs every month because of her business. Whether she thinks she's a business or not, the IRS looks at her as a business. So if she's claiming back, let's just say $5,000. So she's claiming, let's not even say that much. Let's say $1,000 a month because of her housing costs and because she's keeping track of the expenses for her car, mileage. She goes to the same clinic on the same days, there and back. But because she won't trust what I'm saying, I don't want to get in no trouble. Ma'am, you see how cute I am? I'm a little chubby too. They might have a whole lot of fun with me in prison. I'm not going to prison for you to save $15,000 on your tax. I like my husband. I don't just love him. I like him. Like we have a good time. I enjoy him. So I'm not going to tell you something that's going to put you on a clank, because then they're going to come. Do you understand what I'm saying? She's not doing it because she don't trust. She don't trust. And that ain't something that I can heal. I'm not sure why she don't trust. And she don't follow instructions. And so she'll just continue to pay $10,000 to $11,000 every month out of her paycheck. And at tax time, she'll write a check or put herself on a payment plan, and she'll just always be in this cycle. Okay? But the point is that you do not wait until you have money to get a strategy. The strategy is what helps you to keep the money, and then you use that money to invest for more money. Okay? Shay, don't get me started. She said doctors usually assume that they are smarter than everyone else. Baby, when she was trying to quote back to me what the tax law what the tax law is, well, legally you can't. I was like, ma'am, I'm not telling you nothing about no hysterectomies. You cannot tell me nothing about tax law. You can't do that. I ain't about to tell you. I ain't about to tell you what you can't do with a crotch. So you can't tell me what the tax law say. You just we can't do that. We can't do that. All right. I want you. It burns my butt too, Miss Tracy. Burns me up trying to tell me, well, legally with taxes, you have to, and I'm like, did you get who you was talking to? Do you? Oh, you thought you were talking to your mom? Okay, are we back? Because you can't. You can't tell me nothing about tax law, baby. You can't. And I'm not saying that I know everything, but I'm telling you that I know a lot. And if it's something that I don't know, I know where to go to get the answer. It's called IRS.gov, not ChatGPT, not YouTube, not, okay? The IRS is my source. So, okay. So I want you to have a strategy now. I want you to type in the chat now. If you want to have a strategy now so that you can have more money, so that you can keep money. See, me and my husband, we get joy in talking about creating legacy. And before I really knew about all this stuff, legacy was one of those woo-woo words that everybody want to create generational wealth and legacy, but don't nobody know how to do it. Well, now I know how to do it, and I know how to do it well. And so I know the strategies that you can put in place that reduce the amount of income that I got to pay tax on, that also allow me to invest and then pay me money every month that I can then, do you understand what I'm saying? But if you wait till you think you got money, you'll never have money. Just think of the doctor, okay? Think of the doctor. Think of the doctor. Okay. So let me recap. Let me see how I'm doing on my time. Okay, I'm not doing too bad. Let me recap. Number one is, oh, wait, y'all. Let me go back. Okay. Number one is poor expense tracking. You treat taxes like a system and not a season. Number two is that you're missing key deductions. You don't need to love numbers. You need to love your money. Okay. Number three, you have a wrong business structure. This small shift in your mind can save thousands. Number four is not audit proofing. Proof brings peace. Put that in the chat. I love that. Proof brings peace. If you got proof, then you can sit in peace, child. Okay? Proof brings peace. And then number five, no tax strategy. Planning is when you make a profit. If you know anybody in business, and you might be able to relate to this yourself, if you just kind of doing stuff as it goes, and then you sit down and you like, okay, where the money at though? I know I made some money, but where is that? Well, it's because you haven't created a plan. And we can even see that in our personal life. The plan is called a budget. When we don't have a plan for our money, when we don't have a budget, we get paid on Friday and we just ain't got no plan. And then Sunday night, you like, what? What? Oh God, where's the money? Where's the money? Okay. So now you can see why most entrepreneurs overpay the IRS, not because they greedy or they lazy, but it's because nobody ever taught them the framework. But you're going to be different. Okay. After tonight, you're going to be different. So let me ask you something. If you had a system, and I hope you're going to say, yeah. Okay. If you had a system that showed you how to do this, how to not make these mistakes, and you turn them into wins and rewards for you, would you use it? Now, I'm not I don't like complicated nothing. I don't like complicated hairstyles. I don't like complicated people. I definitely don't like complicated systems, okay? I just did a class and it's like, yeah, you can create your own funnel. And I'm like, baby, that's complicated. I can't complicate it. I don't like complicated. So it's not going to be complicated, okay? I want to introduce you to the intent to profit system, okay? Because this is what's going to help you to fix all five of them for good, all right? I'm going to show you this framework. So we covered a whole lot of stuff tonight. And you've seen how just small things like how you track stuff, the structure and the plan can change everything about your taxes. So I want you to take a deep breath, okay? And you might be thinking like, okay, this sounds good, but where do I even start? And that's the same question that I kind of asked myself because I was kind of throwing stuff together as well, right? What I realized is that entrepreneurs don't need more information. You don't need more information. Actually, the opposite is true. We are on information overload. You can go on any social media platform and everybody think that they got all the information. Well, somebody over here on Instagram said da-da-da, and I seen this girl on TikTok that said da-da-da. And then on YouTube, I followed this guy who said da-da-da. You don't need no more information. You need a framework. You need a system. You need a step-by-step. This is what the heck I do, so that you're not overwhelmed, okay? Now, I have two ways for you to connect with the system, okay? This is the first way, and it's a 5-week system. The first week we're going to work on your profit intent mindset, because remember I told you it's not about do I carry a loss every year. What it's really about is, do I have an intent to create a profit, to earn a profit? Okay. Number two, we're going to put your legitimacy blueprint together. What are things that you need to have readily available to you so that when you get the letter that says, Chantel, will you please provide me with proof of your 3 largest expenses? You can go to your blueprint and be like, boom, boom, boom. Okay. Week 3, document, deduct, defend. We're going to audit proof all of your records. We're going to track everything. I'm going to teach you exactly how to do it. Week 4 is about showing your intent through marketing and systems. Do y'all know that there are businesses, there are $1 million businesses who carry a loss every year, but they're never questioned. Nah, let me not say it that way. They win audits every single time. Why? Because they show their intent to make a profit through the marketing and the systems that they have in place. I would not sink money into systems if I wasn't trying to make a profit. Do y'all understand? Okay. And then week 5 is tax smart operations, how you can stay compliant and confident all year. Now, I did tell you tonight that there's some things that you can do at 10, 15 minutes every week so that you can start your system, creating that framework for yourself. But when we walk heavily into this framework, it's going to be so embedded in your subconscious. You're going to be at the checkout getting gas and you already going to have your system open. You're going to be ready for that receipt. You're going to be able to take that picture. You're going to be able to throw that receipt out on your way out the gas station, right? And not just taking a picture of it and it's in your camera roll, and at tax time you overwhelmed again because you got 15,398 pictures and you got to go back 12 months and find all the pictures of receipts, and you don't really know what it was from or where you was at or who you was with. You just know it's a receipt and you didn't write what you were supposed to write on the receipt, and you all the things. Do you understand what I'm saying? Okay. So when I walk you through the system, then you'll be able to stop reacting to tax season and you'll be able to lead your business like a pro. Okay. So I want you to imagine how good it'll feel when you finish this program and you know that your business could stand any IRS question. I don't care what the letter is. I don't care. I don't care what it says, that you won't have any stress about it because you already have a system. Okay. If you want that much control in your business, I want you to drop control. I want you to drop control in the chat. Here's what's included in the framework. Now, this says 5 live models, but I'm going to be completely honest with y'all. It's going to be more than 5 live models. I'm going live on Tuesday. I'm going live on Thursday. I'm going live on Sunday every single week in this group, okay? You're going to have lifetime access to it. I'm going to help you get your legitimacy binder together. There's going to be a private community support, and every Friday, I'm doing hot seat coaching. I'm going live. Come in the coaching room. What do you have a question on? How can I help you structure this stuff? Okay. And then the bonus I'm going to throw in there is the audit-proof kit, valued at $297. A whole bunch of stuff that's in there. Okay. But that's your personal, the audit kit, audit-proof kit has a lot of checklists and templates and plug and play forms that you'll never have a question. For example, if you have an LLC and you're trying to determine like, is it time for me to kind of move to an S corp? I'm gonna have a calculator in there. So you'll just put the numbers in and it'll tell you what your tax benefit is by converting from an LLC to an S corp. Or it may say to you, you know what? You're not quite ready yet because you got to make a certain amount of money to be able to pay for the systems of an S corp. Okay? So, here's your options. All right? Option number 1 is you can do the course. 5 weeks, it's $597. And if that's not something that you think you're ready to do right now, it's no problem. Your other option is to be a part of the Intent to Profit community. Okay? The Intent to Profit community is hosted on a school platform, SKOOL, and it's $69 a month. Now, I'm a shift something for you. I don't want you to think that this is an expense. This is a deduction. It's a write-off. It's an investment into your business. This might be the very first investment into your business that you track. Okay? So you actually gonna make money from investing this money to learn what you need to know so that you only pay what you legally have to pay for your business moving forward. Okay? All right. So let me go ahead and bust this out. This is over $1,500 worth of value in this package. Again, only $597. But let me tell you how this works, okay? The 5-week course, we're not starting on that immediately. If you opt into the 5-week course, I put you in the community, okay? But the 5-week course does not start until February, right around the time when you need to be getting stuff ready for tax time anyway, right? So we're going to walk through that thing the top of February, and I'm only taking 25 people. Now, I told you that I'm going to be teaching all of November, and I'm going to make this offer to every class all of November. And when I hit the 25 spots, then that cohort, so to speak, is going to be closed. Okay? All right. I want you to learn how to operate as a business so that you can feel what it feels like to be a professional. There's so many people who want to use their business to help create legacy. I heard some people say, well, I want to build this business and pass it down to my kids. Well, first of all, you don't know that your kids want nothing to do with what you're doing, okay? I know none of my kids want to do tax. They don't care nothing about tax strategy, none of that. And my kids do enjoy coming to the comedy shows, but if you ask them if they're going to keep the comedy shows going, I don't think they got no interest in that either. But what we want to do with our business is only pay what we owe and use the rest of it to build. Okay? But that requires that we learn how to document like a CEO, like a professional. Okay? Then you can operate with confidence and you can protect the profit in your business. Right now, you don't have much of a profit because you don't know what to keep track of and how to document what you're doing. Now, I want you to be, let's get real for a minute, okay? You are not here by accident. You showed up because you know you're meant to run your business different. And maybe tonight is the first time that you truly understood how the IRS looks at businesses, what they look for, and you now know that you can control all of that. That means that you don't have to be afraid. You don't have to guess. You got clarity. You can get clarity, and then you can gain confidence, and then your cash flow can match that. I heard something. I played this clip that I seen on Instagram. I played it for my husband today, and she said, "My money matched the speed." I gotta find it because what she said was so powerful. Let me find it. It's right here. Ain't gonna take me nothing but a second to find it. She said, "Money starts moving at the speed of my obedience." Money starts moving at the speed of my obedience. You know you need to learn this stuff. You know it's been tugging on you. You know that this is the thing that keeps you up at night, to keep that pain in your chest. You know it, right? So let's just be real. Let me remind you what you're gonna get, but let's just go ahead and knock this out right here, because I hear some of y'all. I mean I hear you, Kim, but I can Google that stuff. Mm. No, you can't. No, you can't. I can Google it. You can, but you don't know if that information that you are reading is false. All things are not equal to every business. Okay? The IRS don't care nothing about, well, I seen it on YouTube, or they don't care. Well, this girl on TikTok told me that they don't care. They don't care about that excuse. Well, I seen it on, they don't care. If it's not in the tax code, they don't care. So you can Google it if you want. But there's so many details and nuances to your business that I don't care if we do the same thing. Let me tell y'all a quick story. There was a I like to read tax audit cases for fun. That tax nerd, okay? I read this audit case where this realtor had bought a yacht. And of course, she wrote the whole thing off and she got pulled into an audit. She refused to take it off of her tax return, so she had to go to tax court. And in order for things to be a deduction, a reward, you have to prove that they are ordinary and necessary for your business. Ordinary means that that's what normal people, it's ordinary for me. If I'm a basketball player, it's ordinary business for me to need a basketball. That's ordinary to my sport, okay? She refused to take the yacht off of her tax return. And so when she went to court, her defense said to the judge, he said, "Judge, my client is a luxury realtor. She sells homes that are on the coast of the bay. Now, she does not sell her homes by driving them up that curvy driveway and pulling them in to the U-shaped driveway and walking them through the front door. The people say yes to the house when she's able to pull them up to the boat dock and they see what the house looks like from the water. That's when they're sold. And she sold more houses from pulling them up to the boat dock than she ever could from driving them up the driveway. And you know what the judge said? You win. She won her case because she was able to show why it was necessary for her to have that yacht for her business. So you can Google it if you want. You can go buy a yacht, but if you don't know how it applies to you and your business, then you are putting yourself further behind than just getting with a tax strategist, okay? I can hear you also saying, I need to think about it. and that's cool. That's cool. I want you to think about the next 5 or 6 months, because thinking about it doesn't change taxes. Action does. Thinking about it will have you in the same space in April as you was this April. Okay? So you can think about it, but it ain't gonna change what needs to happen. Only action does that. The last thing I hear you, I need to talk to my partner, my spouse, my boyfriend, my husband, whatever. I want you to think about how it will feel to not have to pay the IRS more than what you own, or being worried about if you're gonna get a letter or what that's gonna look like. Then that should make the conversation real short. It should make it real short. Okay? So I want you to think about April 15th, 2026. That you got every receipt log, that you know all the things that you need to know about your mileage, that you got your legitimacy binder, your blueprint, you know your profit intent statement. You got all the things that you need, right? And you go get your taxes done. And the person who does your taxes is like, "Okay, girl. You mean you don't owe nothing this year?" Like, okay. That doesn't have to be a dream. That can just be a decision. You just make a decision. Freedom means keeping what you earned. That's being free. Okay? So, let me pull this on up here. Pull this on up here. You can keep doing it the hard way. You can keep stressing and guessing and hoping. Or you can join me and have a system that makes your business audit proof and profitable. Now, let me tell you something. That once you learn how to do this, the rules of the game don't change. Just the amount of money that you make. So all you got to do is learn it one time. You got to be disciplined enough to make it a habit one time. And then you got it. The only time you need to re-up is if your business gets to a point where you got to think of a new strategy or you got to be introduced to a new strategy. But the rules don't change. Okay? So 25 seats. Again, I'm going to be offering this to everybody this month. And so if you want to do the course, QR code, I can drop the link. I'm going to drop the link, okay? If you want to get into the community, because there's something that you can do, you can handle that. QR code, I'm going to drop the link. I'm going to tell you this. If you can prove it, you can keep it. I just showed you that with the yacht, the realtor and the yacht. If you can prove it, you can keep it. And if you can plan it, you can profit from it. Okay? I'm going to stop sharing my screen for a moment. Yeah, Miss Yolanda said Chat GPT. Yes, ma'am. Chat GPT is not, it's a good resource, but it is not the tax code. And it'll get you messed up. It'll have you messed up. Okay. So for the community, and if you are interested in getting in the 5-week course, that's the second one. Now, it is $597 for now. Okay? $597 for now. And I'm going to go through my first cohort. And there's probably some things that I'm going to realize I need to tweak and add, and some sauce that I'm going to add to it. And as I add to it and I add value to it, then that means that the price can't stay the same. Okay? So I want you to also, let me pull this up. The calendar, and show y'all what I'm going to be teaching next November. Oh, that ain't right. Oh, it's up here. Here we go. All right, let me share my screen again. And then I'm going to let y'all go. I'm going to answer any questions y'all got, but then I'm going to let y'all go. Okay? Go down a little bit. Let's see. Can y'all see this? Okay. All right. So this is the teaching that I'm going to do this month. This is today. 5 tax mistakes that entrepreneurs make that cost them thousands. Tomorrow, I'm going to have office hours, hot seat coaching. I'm going to open up my Zoom for about an hour. And if you got some questions, I'm going to spend as much time with you as I can until somebody else comes in. That'll be for the next 3 Fridays. But that's going to happen every week in the community, okay? Next week, on Tuesday, I teach. Let me make this a little bit bigger. Let me make it a little bit bigger so y'all can see it. Next week, on the 18th, I teach From Hobby to Legit Business. How do you turn what you love into a real profitable brand? Okay. This is going to be for the people who kind of side hustling, making some money. They don't really know how to transition into something that's a legit business, so that if there's another PPP, if they want to get funded, whatever it is, that's what this masterclass is going to be about. Next Thursday, I'm going to teach Intro to Bookkeeping. I'm gonna help you understand what bookkeeping is, why you need it, what the difference between bookkeeping and accounting is, the difference between a tax strategist and accountant or a CPA. I'm going to break all that down for you, okay? So that's next Thursday. Office hours. And then next Saturday, I'm teaching QuickBooks. I've had so many people ask me, okay, I know I need to do QuickBooks. I don't know about it. I'm going to teach you part 1 to QuickBooks. And in the last week of the month, let me go out a little bit. We're going to do advanced QuickBooks. This is for people who, I need to keep inventory. How do I do that with QuickBooks? I need to create different classes and all of that stuff. I'm going to teach that. And then we're going to do office hours on the 28th. Okay. December is going to look a little bit the same, very similar to November, because I absolutely love teaching and it's what I know I'm supposed to be doing. So if you, any of these workshops sound like they are where you need to be, then I'll share the link for you to register for those as well. I'm going to take maybe about 6 minutes. If y'all got any questions, oh, let me stop this recording. I forgot that I was recording. Oh, there it is.